Today I'm joined with a panel of my colleagues from the various Ray White Group businesses.
Hi, my name's Jeff Moxham. I'm the principal of Ray White Commercial Metropolitan Sydney.
Hi, I'm Stephen Pajoukis, Executive Director at White & Partners. We provide capital and boutiques advisory services for real estate investors and developers.
Hi, I'm Peter Wilshire, partner from Ray White Valuations, head up the residential and mixed-use development division.
Hi, I'm Eddie Mansour. I'm a partner at Ray White Projects.
Hi, my name is Vanessa Rader. I'm the Head of Research for Ray White Commercial. I suppose just back to the development site market, and we're talking about foreign buyers. Are we seeing those foreign buyers coming in looking to buy those development sites in Sydney? We saw that such a huge way the last few years. Has that quietened down, and particularly in those large projects that were going on in Sydney? Well, what have you been seeing, Jeff?
Yeah, that market certainly has quietened down. What's pleasing to see though is there's a number of major groups that came out that we would call new purchases to the market of sites back then that are now established groups. There's a couple of strong groups such as JQZ that Polly still buying, and unfortunately we're not seeing the new list of purchases in each campaign that we were seeing during the peak of that time. I think that was a very exciting and unusual time for a lot of us in this space in all sectors. Certainly seeing that capital inflow from the Asia markets has really sort of slowed. The market, as I mentioned before, it's really sort of normalised. It's more considered. We're still seeing there to be plenty of activity and plenty of interest in development sites. We just haven't got enough to sell, to be honest. Pretty much everything that we've had in good locations we've sold, and we've sold really well. And I've said to a few people, I think that the interest in development sites at the moment certainly doesn't match the general sort of sentiment that's out there at the moment. That's been really interesting for us. Like even in areas such as we sold two sites in Rouse Hill for Lend Lease. We had a fantastic response. Typically the Northwest, people were curious about the take-up of apartments there. We sold two sites in the town centre there. We had 13 EOIs and it was a fantastic result. So well-located sites with proven sales, infrastructure, amenity going really well. To answer your original question, not a lot of new entrants into the market here from the Asia markets.
That's really interesting, Jeff. But Steve, what are you seeing in the capital markets in terms of offshore?
Look, I agree with Jeff. I think offshore buyers have been frustrated by the recent FIRB rules and the time taken to get a FIRB approval. However, FIRB actually has a lending exemption within their act. And so we're seeing a lot of capital actually come in the form of debt. And we're working with a lot of offshore lenders, and it's not just limited to Asia and China and Japan. We're seeing a lot of money coming out of the US and the UK. We work with a number of US life companies, and they're providing a substantial amount of debt capital where the banks have stopped lending, particularly in commercial real estate and multifamily.
So Pete, further to what Steve said, have you really been engaged by any foreign lenders?
Similar view to Jeff and Steve, seeing more foreign lenders contacting us, wanting valuations done in the residential development space. Conversely, we're seeing where we saw a few years ago a lot of new overseas developers coming into the market. We're seeing a lot more of the local established groups seeing opportunity to come back in, buying sites and moving forward with projects where the last few years they've sort of been on the sidelines.
Pete, we're really seeing that as well. And on the flip side of the overseas market slowing, it's been quite positive for the local market here. We're seeing a lot of local players come back to the market that were sort of on the sidelines in the development site buying space, now that the market is a little bit more considered. So that's a real positive. We're enjoying that.
Do you think that's going to bring some urgency back into the market? Because the last few months, transactions have been occurring. However, it seems to be kind of at a slow pace, and financing's taken time, and it's just been a little bit of a slower rate of movement. Do you think that urgency is going to kind of build now towards the end of the year?
I think it's got a little bit to do with the current environment that we're in right now with regards to COVID. I think pre-COVID, earlier this year, we were really sort of coming up the curve again. My personal opinion is I think once COVID settles down, and as I mentioned before, with international borders opening, I think we're in for an absolute steamrolling run back in the market. It'd be great to see see a little bit more urgency at the moment, but it's just a considered market. People are still wanting to buy sites, and in particular, really well located sites, but it's a normal market. It's a little bit more considered, not huge amounts of urgency unless it's a really, really well located site.